Ladies and gentlemen, good day and welcome to the Q4 and FY25 conference call hosted by Tamilnad Mercantile Bank. This conference call may contain certain forward-looking statements based on the beliefs, opinions and expectations as on date of this call. These statements are not the guarantees of future performance and involve certain risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing a star then 0 on your touchtone phone. Today on the call we have with us the following management representatives: Mr. Sali S. Nair, Managing Director; Mr. Vincent Manacheri Devasi, Executive Director; Mr. Sanjay Kumar Goel, Chief Financial Officer. I now hand the conference over to Mr. Sali S. Nair, Managing Director from Tamilnad Mercantile Bank. Thank you and over to you, sir.
Thank you, and thank you also for the introduction. Yes, I think we have come out with our results yesterday, and as you would see that the results are in line with what we had stated earlier as well. And in fact, some of the highlights I can go through before getting into the details. In FY25, we have delivered the highest ever net profit. If you go back in history, 103 years of the bank's existence, we have been delivering profit year on year, except for 6 years in our journey. So this year is another year where we have delivered a net profit of 1183 crores. That's a 10% plus growth year on year. We've also delivered an operating profit growth of 1,746 crores, 18% up from the previous year, and a total income which is 12% up from the previous year at 6,142 crores. While these are highest ever numbers, if you look at the GNPA, there's the lowest in the last 10 years at 1.2% GNPA. It is the lowest in the last 10 years. If I get into some of the details here, the total business has improved 9.58% to 98,055 crores. If I get a bit of color on this, like I mentioned last time, that the deposits will double by the year end. It has in fact more than doubled. If you look at 3.66% was the deposit growth in FY24, we really underperformed the market. This year, FY24, the growth, the green shoots are very clearly not just visible, it is taking clear roots. The number is 8.43% year on year. We did 53,689 crores. So on the resource front, we are getting back into the game. Even in the advances side, we have almost double what we did in FY24. 6.35% was in FY24. Now we have just about at 11%, and going forward, we will align ourselves to the market. We are beginning to be aligned to the market, and FY26, you will see that we are aligned to the market, perhaps even a tad better. So on the portfolio itself, on the asset portfolio itself, 93% today stands at RAM. 93%, this is up from 91%, and that's one of the reasons why our stress levels are that levels that I'm going to state as we go along. The total income, as I said, 11.82% up. Then a net profit 10.35% up. The book value of the share today is at, as on 31st March, is at 569 rupees. That's a growth of 13.80. The CRAR, the capital adequacy ratio, 32.71%. That is up 334 basis. So I think one of the best perhaps in the industry. The SMA to growth advances, I did mention about the GNPA that we have for the 10-year low. Even the SMA is fairly good at 2.55%. So both together, first level SMA and NPA together is just 3.80%. So that's where we stand from a credit quality perspective. The stress asset ratio, that includes the restructured asset, is down to 2.01. to 2.01%. The gross NPA, as I said earlier, is down 19 basis to 1.25%. The net NPA is 0.36%, down 49 basis, is less than half. And the ROA for the year is at 1.88%. And I'm sure that we have proposed, and the Board of Directors yesterday proposed a dividend of 110%, which of course will be subject to the AGM. So when I get into some more details, I did mention about 9.58% growth happening on the total business. And the shareholder value, when I look at it, net worth has crossed 9,000 crores. It was 7,921.31. It is at 9,909 crores. The book value per share, I just mentioned, 568.90, and the earning per share is 74.68. I think it's also an all-time high. So moving on to some of the parameters, net interest income is at 2,301 crores. The operating profit I mentioned earlier, 1,746 crores. And the PCR, when I look at the PCR, with technical write-off, that is the off-balance sheet provisioning, it is at 93.86%. But what is important is the PCR on book. It is at 71.02%. In fact, we have more than met the RBI guidelines on this, where RBI was suggesting about 70%. 31st March 25, it is at 71.02%. That is nearly 30% up from the previous year. And FY24, it was only 41.33%. The PCR on book today is at 71.02%. Return on asset I mentioned is at 1.88. Return on equity is about 14%. Credit cost 41 basis points. Cost of deposits has moved up in line with the market. It is at 5.91%, up from 17 basis from 5.74. And yield on advances is at 10.22%, going a little slower than the deposits from 10.15%, that's up about 7 basis points. The cost to income ratio, the efficiency of the running of the bank is down from 47% the previous year to 44.60% in FY25. So that's the cost to income ratio. When I move on, give you some color on asset quality. I think the asset quality that we are delivering is, I understand, will be one of the best in the industry. NPA at 1.25%, net NPA 0.36%, and the slippage ratio is just 13 basis points. It's maintained that in the last quarter also it was 13 basis points. In the last quarter of FY24, it was 16 basis points. So you are seeing some improvement happening there. I think 13 basis is really a slippage that we are quite proud of. When I also look at gold loan portfolio, I think because a significant amount of our portfolio is gold loan, the SMA in the gold loan portfolio is just 0.06%. We have an 18,000 plus of gold loan portfolio. The SMA is just 0.06%, and the NPA is 0.01%. Let me also tell you that in FY25, we auctioned nearly 4 crores of gold loans, jewel loans. And we have not only recovered our principal and interest, we actually returned 1.46 crores back to the borrowers, which means we are, giving the adequacy of the margin, evidencing the adequacy of the margin. And there was no portfolio loss on the quality of on the gold loan portfolio. And I think that's a portfolio that we are watching very closely from the LGB perspective, from the commodity risk perspective, and monitor virtually on a day-to-day basis. When I look at the movement of NPA, I did mention that we had a 1.25% GNPA. The gross NPA that we have is 556 crores, and let me also tell you, it is not because of write-offs. Write-off was just 25.59. It has been because of upgrades and cash recovery. In fact, cash recovery was 39.16 crores and and upgradation was about 10 crores. So about almost 50 crores came from hard work that we have put in, and it is more or less offset the fresh addition that happened. So the closing is at 556, that is down about 20 crores from the previous year. And like I said, the GNPA is at 1.25%. If the provision of 363.50 takes the net NPA to 160, that is 36 basis points. And like I said earlier, the PCR is at 71.02%. Even in the SMA, the SMA is a story that I would really like to say, because it's in FY25, the SMA or the overall SMA portfolio, which was at 3.97%, has come down to 2.55%. So that is not just the NPA. Even on the SMA side, the bank has got its act right, and we will continue maintaining it. And even looking at the sector-wise also, even in retail sector, we have about 1.3% of the ground. It's only retail, agri by 0.07, MSME 1.08, and the others at 0.10, totaling to 2.55%. SMA plus NPA, that is, portfolio 1 day past due, even 1 day regular. The portion of the portfolio that is 1 day regular is 3.80%. 3.80%, which means 96.20% has no irregularity whatsoever in the portfolio. I think that's the kind of quality of portfolio that we are that PNB is located. Stress assets that GNPA plus the saddest restructured advances is down from 2.70% to 2.01%. I think the presentation has already been uploaded so I'll skip some of these aspects and come to something relevant from a portfolio perspective, which is the PCR and the collateral coverage. I think if somebody is referring to the presentation, it's on slide number 21. We had, as I mentioned earlier, we have a 556 crores of GNPA, that's 1.25%, and a 363.50 crores of provision. But let me tell you, the 556 crores of GNPA is covered by collateral of 104%, which means the provision, when these get resolved, when the GNPA gets resolved, we are looking to book this 300 crores plus or 350 crores plus of provision as right back. That is a substantial future profits sort of hidden in these provisions. On the growth itself, I did mention earlier that we have doubled. Current account and the CASA per se have been a worry for us. I'll also tell you how we are trying to address that, because we have lost about 300 basis plus on the CASA share, which had a bit of an impact on the NIM. But the initiative that we have taken in the last quarter, I think towards the end, has started bearing fruits. And we saw some uptick happening towards the end of last quarter, the quarter of 2025. We have seen a growth bottom of 6.9%. Deposits overall has grown 8.43%. I think term deposits did contribute significantly to that, the 13.37% of the growth coming from the term deposits, more than compensating the CASA loss. But that's something that we will reverse. It's beginning to show some reversal, and I think that will be accelerated in the current year. And to reverse the CASA, we have taken a number of initiatives. We have, I think last week I did mention that we are setting up a transaction banking group. We have in fact set that up in February, and it has sort of started functioning. there's a significant number of managers have been onboarded for this. I think they are in the market, and we are beginning to see some signs of an uptick in the current accounts particularly, and the government accounts, and I'm sure that will get accelerated. But one of the ways in which CASA is going to be tackled, we also set up the Global NRI Center, which I had stated that in the last call. That also has been set up again towards the end of the last quarter. So we are going to see a significant results coming out of that. We have also taken an additional initiative to set up an elite services group to ring-fence our high net worth the liability franchise customers, deposit customers, and not only ring-fence them, also to look at building upon their relationship and also ramping up the product per customer. The other piece that we are looking at to ramp up, the CASA is we are completely revamping the digital banking. We are bringing in an entirely new internet banking. We have already signed the deal at, I think, in a couple of quarters, I think the entire internet banking space and the services that will be provided through the internet banking is going to undergo a dramatic change there. And on the advantage portfolio, yes, 11% growth, retail at 8.35. MSME sector is flat, but let me tell you, the sector within the MSME that we are tackling, that's above 50 lakh, has shown a decent growth of 12%. So the degrowth is happening in the unviable sector below 50 lakhs. And CD ratio in Q4 as the deposit momentum picks up, CD ratio has also moderated. It is at 82.64%. There was one question on the unsecured exposure, bank unsecured exposure in last December analysis call. Let me tell you that our total unsecured exposure is at 160.60 crores. That is 0.36% of our portfolio is only unsecured. And if I look at the SMA, out of 160, 7.70 crores, 4.79% is SMA, and LPA is just 19 basis points. And if I go a little deeper into the unsecured exposure, 160.59 crores, which I just said it, KCC contributed 15.54 crores, 28 crores came from education loans, 41 crores from the others, 75 crores came from PSU, which, as you know, that is the quality is always accepted. So 160 crores unsecured, so it's not there's no worry on the unsecured exposure at all. And there was also a question on what is the exposure to MFI. Let me tell you, the MFI exposure or total exposure to MFI is just 23.90 crores. That is just about 5 basis points of our I will give a mention about the last investor call, about the carving out the credit from some of the branches and refocusing the branches on the deposits, strengthening the deposit franchise. And I think we have already started the pilot, and our experience has been quite good. We are, I think, pretty much almost completed the business school engine. The loan origination system and loan management system has been sourced. I think it will take a couple of quarters before it comes fully on stream. And the lead tracking system, the customer experience in the lead tracking system has also been sourced and put in place. And so a lot of IT initiatives that we have started in December and going to January, February has come down. And I think for this to start delivering results, I expect another couple of quarters. But meanwhile, I expect this bank to grow. Our growth to be aligned with the market, like you mentioned, perhaps a touch higher than the market. So that is where and apart from that, We have also taken human resource. I did give a color of that earlier, that historic wage revision has been implemented in FY25. That has today 81% of the population of the staff component on the CGC, cost to company method. And we have also implemented a capital management system, an automated capital management system, which apart from helping an end-to-end HR management, also helps us to enhance the CGC pay, particularly the variable pay of the bank profit. So we are slowly getting the ground force aligned to the profit motives of the bank. So that is when I think, and of course, 26, we did over 26 branches. We put a few branches on hold looking for perhaps a change in the location, etc. And in the current year, in fact, in the current half year itself, we are looking to open about 50 or so branches. So that hopefully should take our this number of branches to beyond 600. Today it is at 578. So I will take questions. I think I'll just here, and I will take some questions here.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Jain from Wealthcare Security. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, what is the advances growth forecast for this year as well as deposit growth forecast for this year, for the coming year?
In FY26, we are looking at a combined growth of 13 to 14%. Because we believe that the initiatives that we have put in place would start taking roots. The first couple of quarters would have a challenge as we get into the change mode as a lot of initiatives are getting implemented, bit of a disruption. But in the second half, we expect significant benefits accruing out of it. So overall, for the year, we expect 13 to 14% of growth. Business growth. And within that, deposits should be in the 11 to 12.5% range, and advances should be anywhere between 15 to 18%.
Okay, and what kind of a guidance is there for NIM, sir?
NIM would moderate a bit, but of course the rate cuts are happening. NIMs would moderate a bit. When I look at the kind of CASA growth we are looking for, with particularly the TBG or the transaction business group in place, we expect the CASA growth to be higher than the overall deposit growth, moderating to some extent the cost of deposit. NIM would be in the 3 I would say in the 3.80 kind of number, 3.80 to 3.90%.
3.8 to 3.9.
Yeah.
Yeah.
That is the we're trying to defend. Yes.
Yes, sir. Okay, sir. Okay. That's nice to hear, sir. And sir, about this cost of deposit and other initiatives, whatever you are talking about. So, sir, at present, where are we? In the last Concall, you had told that by the next year you will be able to give a guidance about all the new initiatives. So, at present, yeah.
I think I did mention some of it already. The CMC that with the carving out of the credits from the branches we have implemented in one of the regions. That is something that I promised last time. It has already been done. In the Thoothukudi region, which is the biggest region for the bank, we have already implemented that. The experience, along with the implementation or carving out or centralizing the credit processes, we have put in place a significant resource for the relationship side and onboarding of new customers. That's happening. We have also put in place the LOS, LOS and the LMS, because the CMC would tackle both the retail and the MSME and the agri, the entire credit, as I mentioned earlier. So that also has been inked. That is one. The other aspect is that we have also just about completed the construction of the business rule engine that is undergoing testing at the moment. I think that would be towards the end of the current quarter itself. I believe that would be made available. So that would be the nerve center for it. And with the automation, significant automation in the appraisal process, we expect the turnaround time to come down sharply and making us a very competitive player in the market space. So that's something that we expect to get benefit of that. That's the reason I mentioned earlier that in the advances we are projecting something higher than what we saw. We got a growth of 11% in the current year. In FY25. We are projecting upwards of 15%. So that's on the advances side. To drive, to align ourselves to the market, we have also actually verticalized the bank in the sense that we have created 8 verticals within the bank, each driving a specific business area. And not only driving the business area, also trying to get, ourselves aligned within that business area to what is happening in the market, to check into what is happening in the market, or to create new products, to revise existing products, to refine the processes, simplify and improve the productivity within the within that business area. We have also created 8 verticals, 4 each in the asset side and the liability side. So that's the other piece that I didn't mention earlier. That's something that we have put in place with very, very, very clear budgets to tackle. And as I said earlier, 81% of the bank ground force today is on CTC with their variable pay increasingly aligned to the bank's pockets.
Yeah, sir. Another one question was regarding the advances growth, which you are projecting of 15 to 18%. Sir, I think the norms of Reserve Bank regarding the gold loans and everything in the recent days, and our exposure to the gold loans based loans is quite okay, quite good. So that makes you more confident of 15 to 18% growth. And same extension to that question. And if there is a loan growth of 15 to 18% and a NIM which you are projecting from 3.8 to 3.9, and there is a lot of hidden provisions, so we can expect a profit growth of 20 to 25% possible?
No, I don't think on the profit front we are projecting that kind of. A couple of things that we will be looking at this year. One, of course, is a significant amount of capex happening. Right? We did spend about 155 crores on the IT side last year. But this year I am seeing a significant ramp up of that. In fact, whatever we have contracted already by way of IT assets and automation processes that we are sourcing, I think some of the payments are going to happen this year. And apart from that, some of the branches that we have, the physical branches that we have, we are also looking at how we can orient it towards a modern, with a modern outlook and a modern ambience. So some amount of expenditure is going to happen there. I think we are trying to clean up at least 50 of the branches and reorient these branches as ESG branches, elite services branches, looking at high net worth individuals. So that's going to have some kind of a capital expense is going to go there. So while I did mention about 13% to 14% growth happening, I am not. I think the profit will possibly be aligned to that. It will not be greater than that. In fact, I'll be looking at only at a 10 to 12% growth perhaps closer to 12% for the current year. Because this is the year when a significant amount of capex is happening. But we will ensure that the CR is at 50% and lower than 50%.
So, sir, this will be the last year of
also will
CapEx, sir?
We ramp up the quality of the portfolio. Some, like I said, 3.80 to 3.90. Some moderation of the NIM also will happen, which will contribute, But the profits certainly will be higher than the growth profit that we have delivered this year. We did deliver 10.35%. FY26 profits will be higher than that.
Sir, but this will be our last year of this maximum CapEx will get over in this year?
It will be over. It will be over. Yes.
Okay, sir. Thank you so much for answering all the questions.
We will continue to be investing, but, I think they will be fully loaded into the current year, and 527 is the year that you have to watch the year before.
Okay, sir. Thank you so much for answering all the questions. Best of luck.
Thank you.
The next question is from the line of Hitendra Pradhan from Maximal Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So, sorry if I missed this. So, you mentioned the cost to income would stay a little elevated, or will it normalize further?
No, cost to income, in fact, in the current year, we have brought it down. I think it is at 44%, right?
Right.
It might move up a little, but as I said, the cost to income ratio will be maintained below 50%.
Right, sir. And your, sir, the guidance on ROA was around 1.75% earlier. So,
yes.
Is it still at that level, or?
It will still be at 1.75. Yes. Of course, this year, FY25, we delivered 1.88. But there will be some moderation, 1.75 to 1.80, yeah.
And you say your credit cost and slippages have been pretty impressive. So you see it sustaining at that level, or you see some surprises?
No, I think we have already factored in the surprises. Let me tell you, in FY25, the largest NPA that we have, which is almost 30% of the overall NPA book, the GNPA, we have fully provided. Okay, and if we can recoup that in the current year, where there is a possibility, then that will add to the guidance attention of 10 to 12% of net profit growth. So I think I don't find much of a surprise happening on the GNPA side. As we have delivered 1.25% with a 71% PCR. Going forward as well, I think the 1.25% would be defended.
Okay, sir. Yeah, that's all from my side.
Thank you. The next question is from the line of MB Mahesh from Kotak Securities. Please go ahead.
Hey, hi. Just a couple of questions. I'm sorry, it's kind of a bit late. Just to kind of add on to the previous question that was asked. In a sense, what is the kind of feedback that you seem to be getting from your customers of the situation on the ground, especially with respect to exporters and importers?
No, sorry, you would mention.
No, just asking that. Hello?
Yeah.
Hello?
Yeah, go ahead. I can hear you.
Yeah, sorry. I'll just repeat the question here. The question is that when you look at the situation on the ground and when you ask your business heads about what the feedback is with respect to the implications of your customers on what's happening on the global side, how are you looking at FY26 and how are you responding to it, sir?
First, at the bank-wide level, I think the trade finance is one area we are really focusing on. Okay. I'll come to the macro a little later. That's something that we are focusing on. And we are also having trade finance specialists onboarded into the CMC setup. I did mention it to you. You have come a little late. So let me recap for you. We are putting in place credit management centers. We have already done that in Thoothukudi as a pilot. The experience is good, and we are ramping it up to the other regions as well. We have 12 of them. And we are putting in trade finance specialists, forex specialists to ramp up this one area. We believe, given the kind of clientele that we have, we can really ramp up in terms of, fee income, the forex side of it and the trade finance side. So that's the first part of it. So that's only part of it. But when I look at, what is, the changes that are happening across the world, particularly the US, the tariffs, etc., it has not really impacted our segment as of now. I don't see any kind of significant changes that is happening into the kind of movement in the exports or imports that is passing through our books currently. But just keeping a watch on that, and we are taking, like I said, we are putting in place specialists to specifically look at the movement and the changes that are happening and how we can protect our fee income from it, along with giving guidance to the customers on how they can tackle it.
Okay, perfect. And the second question, sir, in general, have you seen an improvement in pricing for loans, a deterioration in pricing of loans from in terms of the competitive intensity from where we are today?
Pricing of loans, of course, we have already seen two rate cuts now already this year. So that's sort of having an overhang on our pricing per se, in the sense from an absolute perspective. Consciously also, we are trying to moderate, particularly MSME pricing a little. I did mention that the NIM that we will be looking for is 3.8 to 3.9, so in that range for the current year. That also, and looks at a bit of a pricing moderation for our MSME portfolio. And, so the intention is to move into the market and look for new business where pricing would be a challenge. So that is being factored in. Yes, even in the existing book, we have come across pricing challenges, but that is already being tackled in the current year in FY25, and of course, they'll continue to be tackled going forward as well. And I'm confident of protecting the NIM at 3.8 to 3.9 as I suggested.
Perfect. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Jagadesh Sharma, an individual investor. Please go ahead.
Hi, sir. Congratulations for the good set of numbers. I just have one question. Sorry, I just have two questions. The first question is we have 425 branches in Tamil Nadu, and the rest of the states we have 1 or 2, and some states it's in double digit. What are the plans we have? Because we have opened this 26 branches during FY25. What are the plans for FY26, and are we only concentrating on Tamil Nadu, or are we pointing some other states? This is my first question.
We are looking to open 50 branches in the first 2 or 3 quarters itself, so that we do get 50 branches in the first 2 or 3 quarters. Hopefully in the first 2 quarters itself. Maybe there could be a spillover, but certainly before the end of December. And we are hoping to open half of these branches in potential growth areas outside the state of Tamil Nadu.
Okay. So what is the full year number?
Full year number would be 50. Minimum 50. And half of it outside the state of Tamil Nadu.
So my second part of the question, what is your goal out of Tamil Nadu? Where do you want to have at least 300, 200 branches in next 3 years, 4 years? What are the states you are targeting? That's my question, second question.
The second, I think when I look at the profile, with 75% of the branches within the state of Tamil Nadu, going forward, we are trying to drop this down to 60%. That will be a 3-year venture. I think I did mention this in the last call as well.
Yes. So my second question, sir, what about our CEO appointment and everything, sir? Where are we on that?
Not clear. What is it?
Can you repeat that?
CEO appointment.
What is it? CEO appointment. Sorry, what did you say?
Not clear.
the CEO appointment, bank CEO, Indian CEO appointment. MD, you were there in CEO appointment.
CEO, we'll take a call at the appropriate time. The bandwidth, the management bandwidth is now strong, and I think that is getting also reflected in the results that we are seeing. It is strong. I think we have all the the positions at the executive vice president level is now full. And we will look at the operating officer as appropriate.
My final and last and final question is whether we are on track to achieve 15 to 18% ROE by FY26 or 27, and when do you think we will achieve that number? 18% ROE, 15 to 18%.
ROE FY26, I don't anticipate that. I think FY26 we will try and the number that we looked at in FY25, which is about 14%, is something that will continue, perhaps a little better for FY26. But FY27 will be better, but 18% I think would be yearly.
Okay. Fine. All the best for FY26.
Yeah. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Namaskar team, and thank you for this opportunity. Sir, I joined a bit late, so sorry for any repetitive question. But sir, you mentioned in answer to a question that FY27 would be the year to watch in terms of the profitability growth and for the investing community as a whole. So if you could just allude to us what factors will culminate from 2 years from now, or what levers will be in play that will result in that year to be a year to reckon for the company, for the bank.
FY27 is only a year from now, right? We're talking about next year. Why I say that is, one, of course, I've also said that we would be largely aligned to the market growth in FY26 itself. I did mention that we will have a 13 to 14% growth. That is the first part of it. And this is going to happen despite the fact that we anticipate some disruption to the changes that we are bringing in. We have brought in a lot of initiatives, both on the HR side and as well as on the technology side. The processes are being automated. There's a whole lot of changes that are being made. As the ground force gets attuned to these changes, we anticipate a bit of disruption that happens. That is why I said that, the kind of growth that we would love to see in the current year may happen only in the next year because, while the ground force gets acclimatized to the changes and start delivering the productivity that we are envisaging from these changes, I think, I think this year we will see the bank aligning to the market and perhaps doing a little better. But next year, I think the full benefits of the initiatives would be made available and we see a significantly higher growth.
For the benefit of your investors, could you outline what are the disruptive changes that have been put into place and how are they going to play out in terms of the profitability? And the Q1Q, we have seen that even though our net interest earned has gone up, but our operating profit was flat. So if you could just comment 2 points, and then I have 2 more questions, please.
Yeah, the first aspect is that, we have created very clear 8 verticals in the bank with clear business targets. And that's on the asset side and on the liability side. That is the first thing that we have done. And each of them have been given, look at the market, look at the products in the market, refine the products that we have, refine the processes that you have in terms of delivery of these products, automate the process of delivery. I think they have been given very, very specific targets of how to meet the competition head on. That is one aspect of it. So the verticalization of the bank, it has been brought about from that perspective. Second, as I think I mentioned earlier also in the last half an hour or so, about the changes that we are bringing in, the automation that we are bringing in, the kind of credit, the credit management centers that we have brought in to centralize the debt and benefit from the scales of economies of scales rather, and that's one major change that we have brought in the way that we are conducting our operations. We have also brought in transaction business group, the global NRI center aimed at attracting. We have significant pressures where the NRIs are concentrated in, and we want to take advantage of that. We have brought in the global NRI center. We have set up in this month, in the month of April, as just about a week back, Elite Services Group, which of course will take a bit of time to take roots, to ring fence our high net worth individual, ramp up their value for the bank in terms of both product offerings and their outstandings in CASA and the term deposits. So that the ESG is something that we have taken roots. And as I mentioned that the HR initiatives, we are going in for a major skilling program. We have in fact conducted a test across all our HR human resources, test conducted to understand the talent. I think that test has been conducted across all the ground posts that we have. The test was conducted by the Indian Institute of Banking and Finance to understand where their talent lies so that we can appropriately deploy them. That has just been completed. That has been completed, and our redeployment is based on significantly takes inputs from that as well. So HR skilling is a major activity that we are engaged in. As I said earlier, the wage revision that we have signed, which is historic in nature, is now has 81% of the force, the HR force that we have on the CTZ model, where it is aligned to the profit generation. The variable that component is aligned to the profit ambition of the bank. So a lot of initiatives have been taken, and on the IT side, and significant capex is happening. Internet banking has been completely revamped. A significant amount of services to be provided through the internet banking that is on. I think we'll see that how we can avoid customers from coming to the branch and have all the services delivered through other channels, other digital channels. I think that's a major one. I think it'll take a couple of quarters and maybe to move into the third quarter before we see the benefits of that, benefits of the changes in that. The automation of the credit appraisal system, as I said earlier, is on the business rule engine to tackle the low value accounts up to 50 lakhs in an automated fashion, decisioning based on the data. That's pretty much completed. It's in the testing phase. LOS, LMS to manage end-to-end, credit customers. That's is on. It's getting done. Take another couple of quarters before it sort of fructify and start delivering profits. And the business. So I think significant, many initiatives have been taken, and I anticipate all this to deliver results. Going forward, certainly partly in the current year and certainly in a substantial manner in FY27.
Okay. Sir, thank you for the elaborate answer. You did allude to 15% growth. That is what we should envisage in our net profit for this financial year, sir. That is what you are looking for.
No, I didn't say 15% growth. I said 10 to 12% more standard towards growth in the current year.
In the current year. No, I think that you also spoke something about our profitability rising by may incline to increase by 15% for this financial year. That is, I think so I heard you mentioning that also.
I didn't say on that. I didn't say on that.
Okay.
I said so we are the growth is about 13 to 14%. And what I did mention is that I did mention 10 to 12% on the net profit because of the capex that we will be undertaking as a one-time effort. both in the branches, and the physical appearance of the branches, as well as the digital appearance of the branch, digital appearance of the bank. So that means, do a takeaway. What I did mention was that on the GNPA front, that, we have a particular account with a 30%, where 30% of our current GNPA is on account of a particular account. If it gets resolved in the current year, and it has been fully provided, so that would be a add-on so that's what I mentioned. I did not mention about 15%.
Okay. And sir, which sector is it? I just conclude my talk. Which sector the GNPA is, which you are mentioning 30% of the...
This is the corporate sector.
Sir?
That is the corporate sector.
Which segment, sir? Which industry, sir?
Spinning, textile.
Spinning, textile. And then lastly, sir, are we fully funded to fund the growth, or we would be needing any type of equity infusion or bond issuance to fund the growth for FY27 and onwards? And secondly, sir, the Reserve Bank stand on monetary policy now becoming accommodative and going ahead also going to be remain accommodative for the near future, and also the abundant liquidity in the system. How do we see that playing out in terms of the profitability, in terms of the NIMs and other factors? Because you have already lowered the NIMs trajectory to 3.8, I think, so for this financial year. Now with liquidity and things improving, how is banks of our size aligned to the current monetary environment in the country?
Yeah, first question, part of your question about additional funds. I think with a capital adequacy ratio of 32.71%, that is up 334% in the year itself. I don't think in the foreseeable future we will be requiring funding from the capital markets. That is one. I think our challenge is to spread these extra funds that we have in terms of growth. I think that's where we'll be focusing on. The growth is there. I think our single-minded focus is on currently. And I did mention, when I mentioned NIM of 3.80 to 3.90, we have already factored in a possible 50 basis cut.
Yes, that is correct, sir. So I was just trying to understand, earlier the NIMs improved when we were in an environment when there was a tightening of liquidity. And now we are in an environment where liquidity will be in abundance, and the growth from it will be the corporates whose capex and all will be driving the growth, which is not in the annual as of now. So how is the banking system aligned, especially in terms of the small size bank of our nature, which have specific to a specific geography? So that was my question, sir. Yeah.
So that's an advantage that we have. In fact, a large size bank like State Bank of India will mirror, what is happening in the market much more transparent way. But for our bank size, I think our pockets of influence are greater where we are strong for us to withstand some of this pressure. What you mentioned about the liquidity easing, yes, it is easing, but see, so long as it's not felt on the deposit rates, we are looking at the deposit, the rates continuing with the existing, we are anticipating that the deposit, the market would continue to be a challenge. We'll have to look at how, the capex that is happening, the income tax relief that has happened, how it is going to play out, how the mutual fund, the move towards the mutual fund in terms of the SIP is going to play out, and how the larger industry in terms of the pricing of the deposits, the particular term deposit is going to play out when we look at the NIM. To put further color to it, I did mention that we have started the transaction business growth. From that, going to focus on the current account space, and the elite services group that I did mention subsequently is going to focus on this star piece. So CASA is going to be a major focus for us, which we are trying to, even if the deposit, the market becomes a little tight, we would use the CASA as a means of keeping the cost of deposits under control. If the thing ease out, and if the anticipated, liquidity happens, the flow of funds into the banking sector happens, it'll be a bonus for us.
Yes. Thank you, sir, for elaborating the answer. And sir, we as investors hope that market will also start valuing the enterprise value. Or also we are trading much below even one-time book, and taking into account I think the 550 I think is the book value. Correct me there. It is a very it is for investors waiting time for a very very long period. So to be get adequately rewarded. So we are still in the wait mode only to reap gains from remaining investors in TMB, sir. That was only my concluding remark, that the wait has been very long for us. Yeah.
Like I said, we are fully alive to it. I am myself an investor in TMB. We are fully aligned to it. And, whatever we are trying to do is to generate the kind of growth. Like I said, from FY24 to FY25, the growth has doubled. In deposit is more than double. And, of course, the initiatives that we have taken is yet to bear fruit from that manner. This has just been in terms of our own monitoring of business growth internally that has generated it. Once the business initiatives that we have taken start bearing it, the growth, we anticipate to move up further. And like you said, the wage for a better valuation, I think it is going to be over sooner than you think. Because the growth, the profits will come, and as we go forward, the graph we anticipate to trend upwards. But it is certainly from both the growth perspective and from profit perspective.
Yeah. Thank you, sir, for all the answers, and hope for further answers.
It is a market that has to give us a valuation. I'm sure the market will understand, because market is, after all, will understand numbers better than us, and digest it and give us the value that we deserve.
Thank you. Ladies and gentlemen, this will be our last question. It's from the line of Manish Jain from Wealthcare Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, what percentage of our business comes through the digital channels, and where are we compared to other private banks, and what are our future initiatives in this segment, sir?
Through the digital channel, it is, I would say, very close to zero, right? 2 to 3%. But deposits, of course, and the advance side is the fairly. See, those are the initiatives that we have taken. On the advances side, I just mentioned, we have put in place a business rule engine, where which has just been the construction of which has just been completed and is under testing phase, where we intend to use data for decisioning, credit decisioning. I think that you will see starting from maybe later part of the quarter or in the second quarter of the current year. It will go on stream. So a significant, particularly the low value, the below 50 lakhs, we would be significantly using digital means to onboard and also for decisioning purposes, sanctioning purposes of such loans. So I think that hopefully should significantly reduce our own operational cost of managing these accounts. So that process is on. I think that is where the initiative that I mentioned is aimed at. It is very, very low. I don't want to really, nothing worth speaking about. But as we go by, I think the onboarding of customers would be significantly through the digital channel, both on the liability side and on the asset side. In fact, as I speak, we are completely revamping our onboarding journey on the current account space. You are talking about the business, right? Or the transaction?
Yeah, both, sir, both.
Transactions, as of now, it is more than 90%. We have not rolled out any product like pre-approved loans, which is available through digital channels. And thereby, the business growth is, as MD and CEO has mentioned, is 50%. But our customers do use digital channels like internet banking and other digital forms. And transactions are now more than 90% of transactions are happening through digital channels.
Sir, and business you told how much? 44%.
No, business is roughly 2 to 3%. No?
That onboarding advanced customers, credit customers are largely through legacy means. And our entire initiative is aimed at, through other means. We have put in place a large relationship manager post. That's the part we are also looking at how we can be onboarded through various other layers.
Okay, sir. Okay. Thank you for the elaborate answer and best of luck, sir.
Thank you. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I now hand the conference over to Mr. Nair for closing comments.
It was good to talk to the group here. Of course, not been able to see, but the voices were very clear. And like I said earlier, the FY25 has been a year where we have seen, we have tried to break from the past in terms of growth in business numbers. We have partly, or rather more than that, what I mentioned in the last December results call, that we will look at double the deposit growth, and that has actually happened. We have more than doubled it. I mentioned 8%. We have crossed. We are at 8.43%. The overall business number is also, I think, is a tad below. I accept that it's a tad below the market. It's a 9.58. But FY26, we will see that it is aligned to the market or perhaps even better than the market. And our stress quality, the management of our stress is perhaps as good as the best in the market, 1.25% GNPA, SMA at 2.5 or 2.55%, both combined 3.80% of, it's perhaps one of the best in the market. Capital adequacy ratio is very good at 32.71. PCR at 71%, and finally delivering a net profit of 10.35%. And we are a lot of initiatives have been taken to push up both the business levels and the net profit. And I'm sure that the FY26 numbers that we will deliver. We are confident that it will be significantly, it will be better than what we have done for FY25. And that's our endeavor. I think towards that a significant amount of initiatives have been taken. I did mention about verticalization. I did mention about IT initiatives, and of course also about how we intend to turn our branches, at least some of them, in both in terms of appearance and in terms of orientation for business growth. So I think we are fairly confident. I think confident in the sense that the initiative that we have taken is beginning to show some growth. The green shoots are very, very clearly evident. And that gives us the confidence that FY26 is going to be significantly better than FY25. And as I said initially, FY27 is the year that you have to watch out at the NB for. So thank you once again for coming and joining us on this call. And I'm sure any other questions that we have, we can also take it separately as well. Thank you.
You covered everything. Couple of points I just wanted to sort of highlighting here. that is in terms of our NPA management. We have traveled a lot from a position of 1,084 crore in 2021, which was 3.44% of our portfolio. Today, we stand at 556, which is half of what we were in 2021. And similarly, net NPA, if you look at it, this year's position is 160 crores, which was as against 335 crores last. This is against more than 50% reduction in net NPA. These 2 points, I think the investors should take note of. And thank you very much.
Thank you. On behalf of Tamilnad Mercantile Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.